Ever feel like your savings account is just a glorified piggy bank? Well, what if I told you that with just a crisp $100 bill, you could start your journey to becoming a bona fide investor? That's right, folks. Grab your popcorn because today we're diving into the world of investing with just a Benjamin. Hey there, financial adventurers. Welcome back to the channel. If you're new here, smash that subscribe button and join the Vitality Vibes crew, where we turn financial fantasies into realities. Today, we're tackling a question that's on everyone's mind. How do you start investing with just $100? All right, let's start by addressing the elephant in the room. $100 might not seem like much, but trust me, it's enough to get you started on your investing journey. Remember, even Jeff Bezos had to start somewhere, probably with less than $100. The first step is to understand the concept of compound interest. Imagine if your money could have babies, adorable, money-making babies, by investing in a compound interest account. Even your small contributions can grow significantly over time. It's like your money is hitting the gym and bulking up. Let's break down the magic of compound interest with a simple example. Picture this. You invest your $100 in an account that offers a 10% annual return. After 1 year, you'll have $110. But here's where the magic happens. In the second year, you earn 10% on $110, giving you $121. And it keeps growing from there. The formula for compound interest is A equals P1 plus R NNT, where A is the amount of money accumulated after N years, including interest. P is the principal amount, the initial $100. R is the annual interest rate decimal. N is the number of times that interest is compounded per year. T is the time the money is invested for in years. Don't worry, there won't be a quiz at the end. But understanding this formula is key to appreciating how even small investments can grow over time. Before diving into the various investment options, it's crucial to set your financial goals. Ask yourself, what are you investing for? Is it for a rainy day fund, a down payment on a house, or perhaps early retirement? Setting clear financial goals helps you choose the right investment strategy. For instance, if you're saving for a short-term goal, you might want to consider safer investments. For long-term goals, you can afford to take on more risk. Here are some common financial goals to consider: emergency fund, retirement savings, buying a house, starting a business, travel fund. Knowing your goals will help you stay motivated and on track. Now, let's explore the exciting world of investment options available to you. Next stop, the stock market. I know, it sounds scary, but think of it as a fancy farmer's market. You're just buying tiny slices of big, juicy companies like Apple or Tesla. Holds an apple and a toy car. With platforms like Robinhood or E*TRADE, you can start investing with just $100. These platforms are user-friendly and perfect for beginners. But before you jump in, let's talk about the basics of stocks and how they work. A stock represents a share in the ownership of a company. When you buy a stock, you become a part owner of that company. Cool, right? Stocks are typically categorized into two types: common stocks and preferred stocks. Common stocks give you voting rights in shareholder meetings and the potential for dividends. Preferred stocks, on the other hand, usually don't come with voting rights but offer higher dividend payments. Now, let's talk about how to pick the right stocks. Here are some tips for beginners. Research the company. Look at the company's financial health, performance history, and future prospects. Diversify your portfolio. Don't put all your money into one stock. Spread it across different sectors to minimize risk. Understand market trends. Keep an eye on market trends and news that could impact your stocks. If picking individual stocks feels overwhelming, consider investing in ETFs, exchange-traded funds, and mutual funds. Think of them as the all-you-can-eat buffet of investments. ETFs and mutual funds bundle a bunch of stocks together, so you get a little taste of everything without the risk of putting all your eggs in one basket. Plus, they're managed by professionals who know their stuff, so you can sit back, relax, and let your money work for you. Another great option for beginners is index funds. These funds track a specific market index, like the S&P 500, which includes the 500 largest companies in the US. Investing in index funds is a smart way to get broad market exposure with low fees. Index funds are known for their stability and long-term growth potential. They're like the tortoise in the race, slow and steady wins the race. Don't have the time or expertise to manage your investments? Enter robo-advisors like Betterment or Wealthfront. They're like the GPS for your financial journey. You input your goals, and they navigate the best route for your money. Robo-advisors use algorithms to create and manage a diversified portfolio tailored to your goals and risk tolerance. They offer low fees and require minimal effort on your part, perfect for busy beginners. Here's how to get started with a robo-advisor. Create an account on a robo-advisor platform. Input your financial goals, time horizon, and risk tolerance. Deposit your $100 or more if you can. Sit back and let the robo-advisor handle the rest. Ever wanted to be the bank and lend money to people? Peer-to-peer lending platforms like LendingClub allow you to do just that. With your $100, you can help someone achieve their dream while earning interest on your loan. Peer-to-peer lending involves lending money directly to individuals or businesses through online platforms. You earn interest on the loans, which can be higher than traditional savings accounts or bonds. Here's what you need to know to get started. Research and choose a reputable peer-to-peer lending platform. Sign up and complete the necessary verification. Start with your $100 and allocate it to different borrowers. Keep an eye on your loans and track repayments. And let's not forget about cryptocurrencies. Bitcoin, Ethereum, Dogecoin, they're the new kids on the blockchain. With platforms like Coinbase, you can start investing in crypto with as little as $100. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They operate on decentralized networks called blockchains. Investing in crypto can be exciting, but it's also highly volatile. Here's how to dip your toes into the crypto waters. Sign up on a cryptocurrency exchange, like Coinbase or Binance. Understand the different types of cryptocurrencies and their use cases. Deposit your $100 and start buying crypto. Use a secure wallet to store your crypto and protect it from hackers. Remember, the crypto world is like the Wild West, exciting, but full of risks. So, invest wisely and don't put all your money in one coin. If you're looking for a safer investment, consider bonds. Bonds are essentially loans you give to companies or governments in exchange for regular interest payments and the return of your principal at maturity. Bonds are less volatile than stocks and provide a steady income stream. They're great for balancing your portfolio and reducing risk. Here's a quick guide to getting started with bonds. There are various types of bonds, including government bonds, corporate bonds, and municipal bonds. Look at bond ratings to assess the creditworthiness of the issuer. You can buy bonds through brokerage accounts or bond funds. Hold your bonds until maturity to receive the full principal amount. Think you need a fortune to invest in real estate? Think again. With real estate investment trusts rights, you can invest in real estate without buying property. REITs are companies that own, operate, or finance income-producing real estate. They're traded on stock exchanges, so you can buy shares just like you would with stocks. Here's how to start. Look for REITs with strong performance and diversified portfolios. Use your brokerage account to buy REIT shares. Consider investing in different types of REITs, such as residential, commercial, and industrial. Enjoy regular dividend payments from your REIT investments. Now that we've covered various investment options, it's time to talk about building a diversified portfolio. Diversification is the key to minimizing risk and maximizing returns. Here are some tips for building a diversified portfolio. Spread your investments. Don't put all your money into one investment. Spread it across different asset classes like stocks, bonds, real estate, and crypto. Review and adjust your portfolio regularly to maintain your desired asset allocation. Choose investments that align with your risk tolerance and financial goals. Keep up with market trends and news to make informed investment decisions. Investing is not a one-time activity. It's a continuous learning process. The more you educate yourself, the better your investment decisions will be. Here are some resources to help you on your journey. Read books like Rich Dad, Poor Dad by Robert Kiyosaki and The Intelligent Investor by Benjamin Graham. Enroll in online courses on platforms like Coursera, Udemy, and Khan Academy. Follow financial podcasts and YouTube channels to stay updated on the latest trends and tips. Participate in online forums and communities to learn from experienced investors. Investing can be an emotional roller coaster. The key to success is managing your emotions and staying disciplined. Here are some tips to keep your emotions in check. Follow your investment plan and avoid making impulsive decisions based on market fluctuations. Market downturns are normal. Stay calm and avoid panic selling. Remember your financial goals and keep a long-term perspective. Celebrate your progress and stay motivated. While self-education is crucial, sometimes it's beneficial to seek professional advice. Financial advisors can provide personalized guidance and help you navigate complex investment decisions. Here's how to find the right financial advisor. Look for advisors with certifications like CFP, Certified Financial Planner, or CFA Chartered Get recommendations from friends, family, or colleagues. Interview several advisors to find one that aligns with your goals and values. Be clear about the advisor's fee structure and ensure it's reasonable. It's never too early to start thinking about retirement. Retirement accounts like IRA letters and 401ks offer tax advantages that can help your investments grow faster. Here's a quick guide to retirement accounts. Contributions are tax deductible, and earnings grow tax deferred until withdrawal. Contributions are made with after-tax dollars, but withdrawals are tax-free in retirement. Employer-sponsored plan with potential employer matching contributions. Contributions are tax-deferred. Maximize your contributions to take full advantage of these tax benefits and ensure a comfortable retirement. The investment landscape is constantly evolving, and so should your strategy. Stay flexible and be willing to adapt your approach as you gain more experience and knowledge. Here's how to continuously improve your investment strategy. Review your portfolio. Regularly review your portfolio and make necessary adjustments. Keep up with market trends, economic news, and new investment opportunities. Reflect on your investment mistakes and learn from them. Get feedback from experienced investors and advisors to refine your strategy. With just $100, you have a world of investment opportunities at your fingertips. Whether you're into stocks, funds, lending, or even the crypto craze, there's something for everyone. So, what are you waiting for? Take that $100 and start your investment journey today. And remember, the best time to plant a tree was 20 years ago. The second best time is now. Happy investing! If you enjoyed this video, give us a thumbs up, subscribe for more financial adventures, and comment below on how you're going to invest your first $100. Until next time, keep those dollars rolling in.